Good afternoon, everyone. Welcome to the Pacific Northwest Farmers Co-op Market Update podcast for July 10th. I'm Trudi and Lane. With me is Lane Hannes. You'll notice we have a missing chair here. Shane and his wife, Callie Ray, had their baby boy yesterday
morning.
So congratulations to them. So he'll have a little time off here, but we'll
exciting for them and us.
And us, yes. Can't wait to meet him in person and see some more pictures. But
Definitely.
So really happy for them. So real quick, just some housekeeping that we always do. The views and opinions of this program are of the hosts and for informational purposes only. There's substantial risk in trading futures and options, which you should carefully consider prior to trading. So, Lane, now it's you and I here solo. We'll see if we can cover it all by ourselves. But WASDE today, for the most part, the report really didn't show a lot of surprises. Really wasn't within all the estimates. I guess the only thing that I would say, because you're looking at lower corn production, lower stocks, lower ending stocks globally and U.S. on corn, beans, and wheat, all three. The only thing I was going to say, there's a few in there, the balances that were lower end of the industry's guess, which I, thought
corn and soybeans mostly. They were a little lower than the average guess.
Yeah.
Wheat was a little higher than the average guess heading into the report.
A lot of that was the why, this too many surprises on what everybody, analysts looking for it to be in line with what the ending stocks report was on the 30th of June that you guys covered. So just a couple of, I guess, bullet points on wheat, looking at the outlook for what you at WASDE put on there by class. White wheat beginning stocks at 86 million versus the 91 we saw in June, which that was part of that June 30th report. They got production pegged at 21 million, which is down 12 million from last year. Exports are unchanged at 200 million. That puts stocks to use.
Production on white wheat, 232
million. Yeah,
okay.
Sorry. So then, that puts your ending stocks at 82 million.
Yeah.
So,
and that's a pretty good number. That's going to put our ending stocks for this market year at 29.3%. Last year we were at 32.6%, so we're shrinking just a little bit. 5-year average 30.1%, so we're right there in that 5-year average.
What do you think about on unchanged exports? Though it seems like right now we're pace-wise we're on pace or above pace for this marketing year. Part of that is some carry-in too, but. Do you think it's achievable? Do we have lower production?
Yeah, they put exports at 200 million bushels, which is just a hair under, a little more than what we exported last market year, 192 million, something like that. And you mentioned pace. Yeah. We're off to a really good start. We're 5 weeks into this market year, and one of these pieces of paper here tells me 62.9 million bushels of white wheat exports so far. That's our third highest bushels sold at this point of the year. Going back to 1990. The years that succeeded this, 2017, we had 77 million bushels sold. And looks like 2018, 63 million bushels sold. Last year at this time, just 42.5 million bushels sold. Okay. So that 63 million, we're really off to a good start.
Yeah, and I think that's part of that. You see why, what I'm just going to use the term, like floor. We've seen kind of a floor on white wheat, regardless of the volatility of some of the futures, that has been a tradable commodity. And I think you kind of see that number shows why we see some strength in white wheat right now.
Certainly.
Switching over to just the balance sheets of all wheat, certainly the most decrease in production for year over end is hard red winter.
Yeah.
I was looking at that going, you certainly warranted. We've all been talking about how bad some of that Kansas crop is and Oklahoma and whatnot. And, really listening to some other analysts and some looking, do you think that production number at, where did they put it, 471, do you think that is low enough?
Still really hard for us to paint a picture of that. Yeah. The abandonment rate of acres, like we talked about in our last podcast, is so large that I think, as prices pop up here, maybe somebody decides to go back and cut that 15 bushel crop.
Right.
So that's going to change, continue to evolve. Does it get smaller or larger? Gosh, I don't have a great answer for you, but I think it's easier to get bigger than smaller at
Yeah,
this point.
yeah, true that. And the other thing I thought was, well, along those lines of like, even if it's at this number, which what there's someone says like the lowest U.S. production number since 1971 or something like
right.
that. So looking at that, especially hard red winter, bringing it back here to the PNW, to me, it looks like it's a good way for, or a potential for basis to do the work.
Yeah.
Talking about quality, protein, milling wheat,
Mm-hmm.
that you have that less production. Maybe there's some quality issues that could be, basis is going to have to do the work up here to get that. And I think there's potential there.
Yeah. And, Montana is tributary to the PNW, and they're just probably scratching the surface on harvest here or getting ready in here in a couple weeks. So don't really know what their quality is going to be, the protein levels, things like that.
That's the biggest driver for us here.
Yeah. Definitely.
Yeah,
and
absolutely.
while we're on the topic of hard red winter wheat, I've got those stocks to use ratios for it over the past 5 years. It's been averaging 49.3% stocks to use. Last year it was 59.6, almost 60%. And this year it's going to be just below 50%, right there at the 5-year average, 49.7% stocks to use. And for those who may not know, stocks to use is a measure of our utilization of the crop as a whole. The larger the number, less of the crop that we've been using. It's ending stocks divided by total supply, beginning plus production.
Right. So. Production's use, seed, all the domestic, everything that's going to take that out of the balance sheet.
Yes.
And what you ended up with. Right. One thing I thought was interesting about that point, too, of the decreasing stocks to use for winter wheat was I think that as we've been talking about this weather pattern and everything on that production, and even just all wheat in a whole, we really kind of have lowered or stemmed down that premium for U.S. wheat on production because we've been talking about, this glut of global supply. So now you're starting to shift that narrative a little bit. Is there enough wheat still? Potentially, yes, but you're starting to see balance sheet tighten up for the first time than we have in the last 5 years. And does it warrant that premium being there for U.S. quality? Maybe it's shifting in that direction. A lot of weather issues with Europe right now. I mean, the weather models everywhere there's concerns on production. So, and Australia with El Nino as well. So. Yeah,
and I was talking to one of our brokers here this morning, asked them about the heat wave in Europe, and when did this start, and were they harvesting? At what point was the crop maturing? And we look back a couple weeks ago when the heat really hit, they were just getting started with harvest. He gave me how far along they are with their harvest percentage. I think the Durham wheats, they were something like 3/4 of the way done already.
Okay.
So they've been harvesting during all this heat. It's it's later in the life cycle, and then the soft wheats not as far progressed throughout the EU. So it might impact yield a little more there.
Yeah, and part of that too. Where wheat in Europe, that wheat has already kind of gotten to that point, like you're saying, harvested, but they're also bleeding into some of the row crops and corn, especially, and what that does to their production, which.
It's the feed grains and the oil seeds, yes.
And then overall, what that does for us and even the grain complex or wheat complex, it brings that strength to there too. So we've talked about it all the time. Corn is king. Corn is king in the world too. Yeah. So and that kind of brings me to one of the point that I wanted to make about the WASDE was they didn't make any adjustments on the yield, but in that.
In corn,
corn or beans, and then the thing about cattle on feed on the residual. Use and residual being higher versus exports.
We're not feeding more.
We're not feeding more corn.
Sure.
Yeah. So I thought USDA kind of making their balance sheet look like what they wanted, moving that around. It should have been, to me, more potentially export.
So they're still using that trend line yield. We know what the acres are fairly well now. I think they're calling total production for the next crop year 16 billion bushels.
Right.
Last year it was 17 billion bushels. So it's a decrease, but it's still a large crop.
Large crop. Yeah. And they did not do any adjustments to South America crop either. So that's, another.
Yep. Big competitor there.
Absolutely.
Canola, really no changes in today's WASDE or crop production report on canola. The big changes happened last week in the planted acreage, where we're seeing record acreage in a large part of the United States.
Yeah, and seeing some pretty good strength continuing on the canola nearby
We
price.
are, and that was driven by oil futures, crude oil earlier this week, because the ceasefire, the memorandum of understanding with Iran is defunct. So oil prices moved higher, canola followed. Even as oil prices came back midweek, canola stayed strong. So it's promising. It's probably got something to do with the weather in where the canola is grown in Canada and also in the U.S. North Dakota is really warm right now. So if they're pollinating, it's going to impact yield.
Yeah, absolutely. And I think that, weather is kind of the next point I wanted to shift into. So great lead into that. We've talked about Europe, U.S. certainly in the Southern Plains have had their issues, production and the hard red winter. Let's talk about Canada, Dakotas, North, what that looks like. You just talked about that on the canola. Where do we go from here? El Nino, what does that look like for harvest? You got all those things in there and those later production, corn especially. I think that's the reason why you've seen all this strength in futures, not just today, is from that corn production and where it's at in its pollinating. And we've seen these huge heat indexes and forecasts with some dry weather, and that's going to support wheat for a while too.
The market might catch a bid based on the, dome of doom, they call it sometimes. But I think the genetics on corn are so good now that we're going to make it through July, no problem. That's just my 2 cents. The only other thing to note is that those North Dakota spring wheat conditions did drop really big from the Monday before to this Monday. They were down, I think, double digits. Based on the heat.
So, and I think part of that too, with corn, we talking about weather markets, because we've had all this political, other than today, going on, and it's kind of been in the back burner, and the market's not changing much on the headlines, and then weather comes in, and really saw that premium come from the potential of loss in production of corn, and now all of a sudden today we shift into political headlines again. What happened today was kind of, I think, that 1-2 punch with still this more unrest on what's going on with the U.S. and Iran, and now you got Ukraine and Russia.
That's right. We're talking Ukraine and Russia.
Yeah, it's starting to escalate again. So let's
throw away all the WASDE crap
WASDE's
because
today,
when the market opened this morning, we were up 25 cents. We got in here and go, what the heck's going on? Read the wires, and it sounds like Ukraine has been targeting Russian oil tankers in what's called the Sea of Azov. It's a smaller body of water that's northeast of the Black Sea. Grain is shipped through the Sea of Azov by Russia down into the Black Sea and then to the world as a whole. So because Ukraine is targeting ships there, Russia either has or is talking about closing that shipping lane for their grains. From my little bit of research here today, about 25% of the grain they export comes from the Sea of Azov. They've got other ports, in the main body of the Black Sea that support 50 to 60% of their exports. And then there's other ports in the Caspian Sea and the Baltic Sea where other stuff can go. So it's significant if they're going to stop shipping out of there. It's going to raise costs of their wheat and world wheat as a whole.
Right. Anytime you talk about disruption of grains moving, we've seen what's happened with fuel and oil and that kind of disruption. Same thing with grains. The risk premium is there of, does it need to shift? Does that escalate? It really seems like, in all the wires that we read today about, Ukraine increasing their attacks on ports with Russia, not for fuel, and that's going to stop the grain movement. So is there potential on a crop that's getting smaller or the stocks are getting smaller? Do we need to have a premium in there? At this point, then that's why you saw futures go up 20 cents today. So
certainly the headline is bullish, but what's the but?
Right. Well,
didn't it start like 4 years ago and it hasn't stopped?
Right. That's why I think it's why today?
Yeah, I think it's going to be short-lived.
I do too.
So, but nonetheless,
so where do we go from here?
It smells like an opportunity to me.
Does. That's exactly right.
Where was Chicago at the close today? September is like a 640. Was as high as 650, or no, I'm thinking December now. December closed a little over 650.
Right.
So we're back into that good area for hedging, I think. If you're of the opinion that this is a short-lived conflict, wheat prices return to, where we were 2 weeks ago.
Right.
50, 60 cents lower than this.
Right. And there's still that underlying harvest pressure that we keep talking about. And we've had strong demand that's continued in there as long as we don't lose some of that continued demand because we've outpriced ourselves in the world market if this potential doesn't come to fruition. I think you got to look at it especially on the heels of a harvest that out here looks really good. Crops look good. We could see bigger yields than what we've been anticipating. You're probably going to have more bushels to market. A good time to put on the hedge for a hedge to arrive. If the basis doesn't make it, cash prices are near the high of what we'd seen for the whole, at 660 was the high.
There's no shame in selling 655 cash wheat.
Absolutely.
In my book.
Yeah. I mean, I think you got to kind of layer that in, but I do believe that, good time to put on a few more hedges because the crop is getting bigger as well.
Yeah. If you got the bushels, go ahead and hedge it. Take advantage of these futures prices. We did lock in a lot of basis, 40, 50 cents over September here in the last couple of weeks when futures did drop down. If you didn't get your chance to do that, again, it's an HTA, it's flexible. We can kick that thing out to December, buy some more time to set basis. The spread did shrink a little bit today because of the Russian stuff, Ukraine stuff. I think that spread would widen out again as we drop. Give yourself a little more carry into December. Right now it's 14 cents. 16 to 18 is probably a good spread. So.
And I look at it, what's your opinion on that too? But I really look at it going with the volatility that we have in the futures, and we've seen it over the last 2 months at least. I mean, even that short period, that the volatility is there, that we could see that basis because if cash does what it has been doing, which I'm going to anticipate it does, we're sure if the futures come down, we're going to see a little bit of weakness in cash, but the futures have moved so much one day to the next, you're able to catch a really strong basis. Absolutely. And I think there's still, putting on a new September hedge, I think you're going to have some potential of getting, is it 50, but it should be somewhere in the,
there's
40,
40 days. Well, a little shorter than that if we're talking HTAs to get a basis put on it, maybe 30 days. But
I do too. I mean, I think, you look at I think basis, or excuse me, HGA level in September was anywhere from 640 to 645 today. You add 50 cents to that, you're beating cash. Yep. If cash comes down, futures come down. So I think there's a lot of potential there, but cash is a good number too, I think. Right. We're going to have demand kick in to make that number higher.
Yeah, got to keep seeing those export sales come in nice and steady. I agree.
Yeah, awesome. One last thing before we close, we are putting our harvest newsletter together. It'll go out in the mail next week. Look in the mailbox or that. We'll try to get some information out there for you on everything for harvest and have a safe harvest. And we're here for anybody that needs something. And
yeah. The anticipation's been building around here. We're excited to get into harvest and help everybody. So with that, good luck to everyone.
Yeah. Thank you for joining us.
Thank you.